The first tick on the index is down about 0.5%.
It's the Nifty sold off about 125 points as we speak, but still holding on to that 18,000 mark. Surprise Democrat performance in the U.S. midterms hurt the world market.
The big driver, and we were talking about this in the morning, is of course the U.S. inflation number. So this was a bit of a do-nothing kind of day. And I think it's kind of panning out like that.
Defended the 17,950-odd mark on a closing basis. Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track around 6 hours of the trading action in just 5 headlines. I'm Nigel D'Souza. Let's get straight to the headlines for the day. Weak global cues drag the Wall Street. The Sensex slips 400 points. The Nifty loses nearly 130 points. The rupee loses 40 paise against the US dollar. Tata Motors deflates after a big miss in earnings and cash flows. High debt and a cut in guidance by JLR adds to the woes, even as the company eyes some recovery in the second half of the fiscal. Axis Bank falls as the government under Sooty is slated to divest all of its 1.5% stake in the bank. Separately, sources say that the government has no plans to sell its Sooty stake in ITC. Lupin leaps on beating street expectations on margins, but Piramal as well as Deepak Nitrite, they slide after reporting disappointing set of numbers. A bunch of other mid-caps like TeamLease, Questcorp and PrincePy, they also see big swings on earnings. Chaos across cryptocurrencies after the largest exchange, Binance, abandons its proposed deal to rescue its rival, FTX. Binance cites due diligence and reports that FTX mishandled customer funds as the reasons. Cryptocurrencies lose $100 billion in value over the last 24 hours, with the Bitcoin hitting 2-year lows. Well, here's what we have lined up on the show for you. It's a power-packed one as always. In market opinion, we have Manishi Ray Chowdhury of BNP Paribas. And in big corporate voices, we have Ramesh Swaminathan of Lupin talking about the bounce back in its US business. Well, let's start with markets first up. The benchmark indices, they slipped close to under 1% each amid weak global cues. The market's also watching the US inflation data. Well, the Sensex was down close to around 400 points odd. The Nifty fell 100 points but managed to stay above that 18,000 odd mark by the time we did close up. The bank and the mid-cap index, well, they as well closed in the red. Prashant standing by to run us through the day's market action. Prashant?
Well, the market sold off a little bit today, but it would have been worse had it not been for some late help, which we got from banks. So the Nifty ended slightly above the 18,000 level, and it was off 60 points from the day's low. The sort of kicker came in around 3 o'clock from two names, HDFC Limited and HDFC Bank, and the private bank index really is what helped things quite a bit. Otherwise, broadly, it was slower. So autos, PSU banks and small caps as a space were under pressure. Actually, today was one of those days when advances to declines ratio from the word go from 9:15 in the morning was in favor of declines. Large cap losses coming through in lots of earnings related hits. Tata Motors was down, Mahindra and Mahindra, the Bajaj twins, Bajaj Finserv, Bajaj Finance were lower, Titan and Grasim were some of the other losses that we had. Gains coming through in Hero MotoCorp, ONGC and Bharti, which ended higher. Again, broader markets, far more declines as compared to advances. Oro Pharma was down, of course, on the back of news flow. Deepak Nitrite on the back of earnings. Mazga on the back of earnings. But, of course, also the fact that the stock had run up quite a bit. Garden Reach, another shipbuilder, was under pressure. Piramal Enterprises, earnings related. Piramal Pharma continues to sell off. Ramco, continued pressure. Bank of India, RVNL and TeamLease, some profit booking is what we saw. Gains also came through in mostly earnings-related names. Lupin is a case in point. Godrej Properties reversed after yesterday's move. Narayana Hrudayalaya, good set of numbers. Nesco and Newland Laboratories, which closed about 20% higher. So, it's a tentative kind of a day, a wait-and-watch kind of a session. And I think the markets are waiting and watching for the US monthly consumer price inflation numbers. A beat, a miss, inline, I think all of it would matter for the direction of risk assets in the near term. Back to you.
Thanks a lot for that, Prashant. Well, here's some opinion. We spoke to Manishi Ray Chowdhury, the Asian equity strategist at BNP Paribas. He said that earnings season has been a mixed affair. He added that Indian markets have stayed relatively stable despite significant FI selling. Let's hear him out.
Indian earnings season, from what I gather, has been a mixed affair. You know, you had pretty decent numbers from some of the private sector banks early on. A couple of the top-rung IT service companies as well. The markets like Korea or Taiwan, which are export-heavy, tech hardware-heavy, the stock collapse has actually been driven by earnings collapse, which actually came earlier. The earnings estimate declines in those markets have been in the region of about 18 to 23%, if you look at the last 1 year. For India, it's been in the range of 6 to 8%, which is not such bad news in the context of the world that we are living in. India is relatively safe compared to, and that's getting reflected in the share price performances. I have a chart hidden somewhere. You know, you can plot it if you have like a Bloomberg terminal. You just plot MSCI India, MSCI China, denominated in US dollars right from GFC. These two markets used to move in lockstep, you know. Investors had very little to choose between them. But from early 2021, China collapsed. India has been relatively stable during that period. And this would be true if you plot India against, let's say, MSCI Asia ex-Japan as well. So this has actually been the story of India.
Well, moving to the second headline now. Tata Motors, that was the top Nifty loser after it fell closer around 5%, owing to the weak set of numbers that they reported. Sonia's with us to run us through the numbers and what brokerages are making of the stock. Sonia?
Well, you know, to start off with, I have Motilal Oswal, which has said that JLR's numbers are an all-round miss and they've cut their EPS estimates for FY23 to a loss from a profit earlier on. They still have a buy on the stock, though, with a target price of 500 rupees, followed by which there's HDFC Securities that has maintained a reduce with a target price of 415 rupees. Now, the main concern, according to them, is the rise that we've seen in Tata Motors' debt. The debt has risen to almost 60,000 crores, and that is a big concern. And it will be challenging for the management now to meet their net debt-free target by FY24. Let's move on to Phillip Capital. That is a bit more optimistic. They say that all of these global risks are transient in nature and the stock offers a great risk-reward perspective at current levels. They maintain a buy with a target price of 530. JP Morgan has a neutral on the stock with the target price cut to 410 from 450 earlier. They've also cut the FY22 to 25 EBITDA by 3 to 9%. They say the India business has disappointed in this quarter and the management has cut the guidance for volumes and free cash flow for the second half of the year. CLSA has an outperform. They've raised their target price to 491 rupees. JLR performs better than the India business in the second quarter, they say. So all around, if you'd have to see, it's a bit of a mixed bag. Most brokerages are disappointed with the fact that the JLR business is on the weaker side, but also the fact that debt has been rising and the company has cut their guidance. Back to you.
Thanks a lot for that, Sonia. Well, the third headline today. Axis Bank was down closer around 3% after the government, under the specified undertaking of the Unit Trust of India, or SUTI, is slated to divest all of its 1.55% stake in the bank. Abhishek Kothari is with us to run us through all of those details. Abhishek?
Well, government via SUTI will sell about 4.65 crore shares in Axis Bank. This forms about 1.55% of the stake in Axis Bank. So floor price has been set at 830.63 per share, which is a discount of 5% to yesterday's closing price. So it is a clean out trade given the fact that, you know, SUTI holds about 1.55% in Axis Bank. Just to alert our viewers, on November 1st, Bain Capital had sold about 1.24% stake and they have a residual stake of 3%. However, they are in a lock-in period of 90 days before they can further pare down their stake. So share price of Axis Bank, as of yesterday was almost at an all-time high.
Thanks a lot for that, Abhishek. Well, meanwhile, ITC was down close to around 1% after sources said that the government has no plans to sell its SUTI stake in the company. Remember, that was a bit of a fear that now they're offloading in Axis. Will they do that in ITC? But Sapna joins in to run us through the quick clarification that she picked up. Sapna?
So what we have heard very clearly at the moment is that absolutely no plan or no thoughts of any kind of a residual stake sale in ITC. If you recall, way back in February 2017, the government had offloaded some stake in ITC, that is a SUTI undertaking. And currently they continue to hold close to 8% in ITC, valued to somewhere around 34,000 crores. But what we have been clearly given to understand is that nothing is there on the cards as of now, any thought process on that front. However, I'll just add a bit of a caveat here. because, OFSs are something that the government will never talk about in advance. What we can only talk about is the current status. Currently, the clarification is ample that there's nothing on the cards.
Okay, got that. Thanks for the clarifications. Up now, for the time being, we'll slip into a short break, but you stay with us. We'll be back in a jiffy with the other headlines.